Hello, guys. You're welcome to Forex CMC online mentorship. On this video, I'll be teaching you on the concept of inducement. Okay, I did promise you that I'm going to teach you this concept some in my subsequent, my previous video. So this is inducement right before us. So please pay attention and listen carefully. This inducement, some other person will call it complex market structure and all that, but I I don't like complicating things for myself. So that's why I decided to break it down for you to understand. Okay. Now, inducement, it's simply from the word, it's simply uh, a way in which the market makers, if they want to buy, they clear off buyers and still bought. Okay, it's like a form of stop hunt. That's why if you watch all the some tutors on this inducement theory, you will see two things there. Some of them play it as stop hunt, some of them play it as internal liquidity. Okay, I'll be diving deeper into it. This is one of a video you will never see anywhere. Okay, so please pay attention and make sure you watch it to the end. Okay, now inducement, there are two broad categories of inducement I have noticed. Okay, there is inducement as internal liquidity. Now let's assume this is a bullish market structure. Okay, and you start having other structure like this, maybe something like this. Okay, something like this. The market comes and clear this and move in the direction of the trend. Okay, this is inducement because the liquidity here were taken. People actually bought here and people actually bought here, but price took them out and still went in their direction. This is inducement that is caused by what? Internal liquidity, or inducement as internal liquidity. Okay, I hope that is clear enough. You will often see this in your charts. Okay, I will show you some backtest I did. Then my next video, I will give you a trade example video on this. Okay, now the second type of inducement or division of inducement I've seen is inducement as a false break of structure or stop hunt. Okay, let's say you have market structure like this, you see something like this, then market still go higher. Why did the market do this? What causes this false break of structure? Because the disadvantage is that if this thing breaks structure and you now say, oh, structure has changed, and you now try to sell here, you will be taken out. Okay, so that is why this concept is very, 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 very important. So why is this? How do you know that this is an inducement or a break of structure? Because this can be a break of structure in some scenario, this can be an inducement in some scenario. So what differentiates this as inducement or as a break of structure? Please pay attention. You will learn so much in this video. And that's what will take me to the causes of inducement. Okay, the causes of inducement, like the first I said, is caused by liquidity. There are two things I found out that causes inducement, and those are the two things actually that also move price. Okay, that determine price movement, and that is liquidity and imbalance. Okay, liquidity and imbalance. Now let's say let me um, draw something like this, and price further move in the direction of the trend. Now price has taken away these people here, so this is an inducement. Okay, an inducement or a stop hunt. Okay, they are just the same, basically the same thing. Okay, so now what could cause this? Now when there is below this, let's assume there is an equal low, or let me add some lipstick to this. I think there's some things I wanted to add to it, I didn't. Okay, now let's say you have something like this, then you now have something like this, and price move higher. Now let's say you have something like this. Okay, then price moved higher. Now, this is liquidity, an equal low. So price would come on a later date and take this and still go in the direction of the trend. Okay. Then vice versa for a bearish trend. Let's say you have uh let's say you have price moving like this. Okay. You think then this being an equal low and price moved like this, then came for the equal high. This is equal high now, and still went further. This is like this is equal high. Okay, this is equal high, EQ H, and equal high. Let me quickly just add that lipstick to it. It's an equal high. Okay, then why this is an equal low. Okay, this is why this is an equal low. Let me just quickly add that for the purpose of understanding equal low. Okay, so this is in liquidity as the cause of this particular inducement. Now there is another inducement that is caused by IPA, that is imbalance price action, or a fair value gap below the higher low or above the lower high. So now let's say we have we have let's take a bullish scenario. Let's say we have something like this. Price comes back, then still went further in the direction of the trend. If there is an imbalance here, okay, that this particular low didn't mitigate, if there's an imbalance below, price, because price wants to rebalance the market, there's every tendency for price to come back, rebalance this, and still move in the direction of the trend. Or the opposite for a sell scenario, okay, where you have something like this and price still move. So when there is an imbalance right here, okay, that could be the result, that could be the cause of that particular inducement. So now please note, before I go to the back test I did and show you some of the live examples of how this thing works. Now there are two things I want to say. Please note that when these causes are in place, that is when there is liquidity above the lower high, okay, when there's liquidity above the lower high, and when there is liquidity below this, when that condition exists, okay, or when there is IPA or FVG below the higher low or above the lower high, when this condition also exists, then we should expect inducement, because at that time inducement has a higher chance of occurrence. Why? Because price will always come for liquidity levels, and price will always come for imbalances to rebalance the market, so that the market can be efficiently delivered. Okay, so that the price can be efficiently delivered. Now, then when that exists, please pay attention. Please pay attention. This is very, very insightful. This is one of the videos you will not see anywhere. Okay. Now, when an order block exists, okay, above or below this, either when an order block exists above this or below it, then we should expect rejection from them. For example, let's say let's say after this low, let's say you have another block here, another block, that would be a very point to put our POI, because it will be rejected. Other block will reject it from it, okay, because since it's an inducement, it's not a change of trend, so there is every tendency for the market, there's every tendency for the other block here to reject it, because that other block is still very much valid. Same thing with this, okay, another block existing above here will mean a rejection. So once you are able to spot another block above equal lows or equal highs, then you should be expecting a sell. You should be expecting a sell. Okay, this is very powerful. Some people will call this, what I'm telling you now, some people will call it flip zone and all that, but just know what we are talking about. I make things very easy for myself. I don't complicate matters for myself. Now, it's the same thing with this. Now, when you see that there is an imbalance here, then let's say below the imbalance, you now have an order block. Okay, when you now have another block below the imbalance, that will be a very good rejection point. Same thing here. If you have another block, okay, another block, above this level, that will be a very good rejection point to take your trade. So if you want to frame this kind of trade, you will just simply put the other block as above or below your FVG, above or below your liquidity level. Just put your highlight it as your POI. You'll be looking forward to a 5 minutes or 1 minute or lower time frame redistribution or reaccumulation. That is how it works, guys. So let me quickly head over to my back test and show you some of this, how it plays out in a live chat. Okay, so this is some of my back test now that I did. Now, if you check this, there was a break of structure here, right? There was a break of structure here. Now, if you look above that, you will see equal highs. Like if you see here now, there is a wick here, there's another wick here, equal highs. There's another wick here, which is relative equal highs. You see that price came on a later day, came for it and it tanked. Okay, you see now, it tanked. So that is the first back test I did. The second one is, you see this, there was a break of structure. Okay, there was a break of structure here. Okay, you see this candle, this now become high, low, lower high, lower low, lower high, lower low. Now you see this lower high, you see that there is an imbalance above it. There was an imbalance above this lower high. So you see that here became an inducement level. So it induced it on a later day and it tanked. Okay, it induced it and it tanked. So let's go to another one. You see this, okay, there was an imbalance above, and there was even this one, there was even liquidity here. Remember, there was a break of structure. So this become low, high, low. Okay, this is the valid high now, high, low, like that, like that, like that. Then you see price came for it, took it, because price needed to rebalance this imbalance here. Okay, let's go to the next one. You see this also, this trade actually took me out there because I couldn't spot this liquidity resting. Look at equal lows here, equal lows resting, and there was even an imbalance below. So that is why it's induced it, and I didn't save the later chart though. I believe that it came, after inducing it, price went in my direction. Now let's check this one again. If you check this, you find out that there was, an relative equal low here, price, and there was an imbalance also. Okay, you see this, there was an imbalance that was not fully filled. So price came and filled that imbalance and it tanked like that. So you see this one was caused by liquidity. There was an equal low, price came, took that equal low and rallied up. Same thing with this. Same thing with it. There was a liquidity level here. You see price came, tap that liquidity level, and price rallied higher. Okay, same thing with this. Let's see. Okay, here, look at this place very well. There's an imbalance here. Okay, price came for this low, came to this other block, mitigated it and rallied. You see how this thing keep playing out, guys. This high, it came for this equal high, price target and rallied. Okay, so on and so forth. So guys, in my next video I'll be going to my chart to show you this how this play out on the chart. I hope this was insightful, guys. Please watch this video again and again. This concept is powerful. You will hear some people want to complicate things like complex market structure. Some people call it complex market structure. Just know how player delivers. Just know how market structure works. It's not every time you expect inducement. No. If these criteria are not there, like you should see the example I just showed you, If there's no liquidity above your lower high or below your higher low, if there is no imbalance below your higher low or above your lower high, there is shouldn't be expecting, inducement. So I hope this was helpful and hope it was insightful. Catch you in my next video. Peace out.